mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in 20 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm very good, Bryce. How are you?
Very excited because A, we have a new leader in Australia's Next Top Trader, and B, the AFL season 2019 has kicked off. We had Richmond and Carlton on Thursday and a massive game last night. Pies and Geelong, which you were at.
Yeah,
now that you're down in Melbourne, you can frequent these games. How good. We're off and running. It's been a long summer, but I'm stoked that we can now talk about footy again at the start of our episodes.
Yeah. Let's. I reckon the two most common pieces of, let's say, constructive criticism we get are, one, our audio quality. We know we're working on it, and two is all of our footy chat is doesn't last when people go listening to episodes like 6 months later.
True.
Most of the time we're wrong. They're just like, who are you talking about?
True. All right. Well, let's leave it at that then.
But I agree. Very excited for the footy.
Yes. All right, well then let's move on. All right, Ren, so this episode is our what's hot, what's not, and market wrap for the last week on the US share market for all those playing along with Australia's Next Top Trader, and those that aren't, this is going to be just as valuable. But there's been some news this week, Ren. I know you want to address some of it, so I'll let you kick it off, and then we'll move into how the market's performed and how we've been trading and how some of our stocks have performed over the last week.
Yeah, nice one. Well, the big breaking news this weekend is that Robert Mueller's report is released, and interesting to see if that'll have any flow-on effects to the market, but that's not the news that I wanted to quickly touch on.
Slipped it in there, though.
Yeah, I know. I'm pretty excited, to be honest. The yield curve inverted. And for people who aren't familiar with that, there are different length bonds that you can buy in any country, but specifically in America we're talking about here. And generally, investors get paid more for long-term bonds. So if you give your money to the government for 10 years, you get paid more than if you give your money to the government for a short amount of time, say 3 months. And what's happened recently is that's actually inverted, and now you're getting paid more for short-term money than you are for long-term money. That's an indicator of investors' perceived risk in the economy, and generally it's a lead indicator of recession. So it's definitely worth giving a little bit of a read. I think we did an episode on it, or we talked about it in an earlier episode, so you can try and find that. But definitely one thing to keep an eye on if you're not across what's happening in the bond market. It is big news in investing world.
So what does that mean?
Well, for you, it means everything, because you've been dreaming of a big recession for a while, and this is just one other indicator that it might be coming.
I know, Ren. I am pretty excited about it. Cash is sitting there waiting for something to happen. So, as you said, we did an episode on it, leading indicators for recession. It seems like it's going that way. And I'm going to be very interested to see how this all plays out.
Yeah. Now, the important thing is a timing thing. It generally is a lead indicator of a recession, but it doesn't mean it's around the corner. Sometimes it can be years before the recession follows. So, don't go 100% to gold or hide your money under a mattress just yet.
Exactly.
I mean, I already do that, but...
You're anti-government, don't have a bank account, Ren.
Yeah. 50% crypto, 50% gold, 100% untouchable by the government.
All right, well, let's move on and talk about... I want to start with what happened last night on the markets, and then we'll move to bigger picture, what happened during the week, and then we'll wrap it up with how our trades have performed and what trade you did during the week in the middle of the night, Ren, and then any other news that we can tie it off with, okay? So, last night, Ren, a bumpy ride for everyone last night, ended up down on all the major indexes. S&P 500 was down 1.9%. The Nasdaq was down 2.5%. The Russell 3000, which is all 3,000 stocks in the US, was also down 2.09%. that led to the overall market being down for the week. So last week we saw the market up 3.5%, and this week all those gains were wiped out. Well, not all of them, but last night especially there was a bit of a bumpy ride. S&P 500 was down 0.7% for the whole week. The Nasdaq down 0.5%. So relatively flat movement for the entire week. But if you were long last night, any leveraged ETFs, if you were long on the Nasdaq or long on the S&P 500, you would have lost out. I'm long the Russell 2000 REN, and I've got a 3 times leveraged exposure to that. And for anyone listening, the Russell 2000 is the bottom 2000 stocks. As I said last week, it doesn't take in the top 1000, so it's more the small cap growth stocks. And they got hammered last night, down 3.6%. And because I had a large exposure to it, I actually got hammered, and I'm sure I'm going to find myself down near the bottom of the leaderboard because of that. So
do we know what drove it?
The Russell 2000 or the overall market?
Well, your poor decision making, but also the overall market.
Well, look, so there's growing fears of a global slowdown, as we all know, and also this thing that you talked about, Ren, the 3-month, 10-year yield curve inverting for the first time since I think it was 2007. These sorts of things all add up to a bit of a tumbling in the market. The Mueller thing, I'm not sure when that came out. I'm not sure if it had an effect or not. But
I think it was Friday afternoon.
Yeah,
US
right.
time.
So probably after the market. But
which side note is interesting in and of itself, because you release things on a Friday afternoon when you want them to get buried in the news cycle. So
yeah,
take that how you will. Anyway, that's for our separate US politics podcast,
which will be coming in 2022.
Yeah.
Yeah, so I think, we're in the middle of reporting season, and we're seeing some major companies missing expectation, forward earnings estimates coming from them showing signs of slower growth. So these are all having an impact, and these things lead to, I guess, negative investor sentiment. Do you have any sort of reason why you think this may be the case? Last night particularly?
No. I think what you said sums it up. Let's get into the week that was, and then I want to hear about your trades.
Okay. So the week that was, we saw utilities increase. We saw crude take a bit of a hit. That's oil. And gold actually had its best week since February. So people were sort of moving out of stocks and seeking refuge in, I guess, utilities being more the bond type investments, and gold obviously is an investment that investors go to sometimes to sort of hedge against stocks. I put on our Instagram at the start of the week that Nike, FedEx, Porsche, and Tiffany were all reporting during the week. So Nike had a bit of a shocker. It plunged 6.6% when it reported. FedEx also had a shocker, down 5.8% when it reported. Climbed since to the end of the week, but remained down 2.3%. Whereas Tiffany had a bit of a stronger week. It's up almost 7% on the week. So some mixed results there. Aurora, which is the stock that our leader from last week had bought into, it had a big plunge during the week. So I'd be interested to know if James had a stop loss on that. We've noticed that he's no longer number one. He's been hit off the top perch, and we'll get into that a bit later. And Weed continued to have a bit of a strong week, and then obviously fell yesterday as well. So that's the week that was. I just want to point out one thing that did really well last night, Ren, and this is something that Matt spoke about at the very start, and it's more for experienced investors, but that's the VIX, and that's trading volatility. And so last night, the VIX, if you bought into a stock called VIXY on stake, it was up 11%. And there was another volatility stock you can buy into, UVXY, it's up 17% last night. So very difficult to pick those sorts of stocks and very dangerous, but if anyone was in it, then they'd be shooting up the leaderboard.
Yeah, nice one. So I think that leads nicely into how we're going on the leaderboard.
Yes, it does.
I actually haven't checked our rankings, but how did your week go? Did you make any money?
So I left my 2 trades that were in last night. I'm just going to see where I am on the leaderboard because I'm sure it's not great. So I've actually jumped a lot of spots. I'm happy with that. I'm up to 157th, up from 300th last week with an overall gain of 0.6%. And
smashing it.
Alec, you're 117th with an overall gain of 2.28%. So you're on the climb as well.
Okay.
Nice one.
So who's ahead of who?
You're ahead of me by 50 positions, but you're ahead
That
of me
is
by
all that matters.
you're ahead of me by 2% thereabouts.
Okay, great. I'll take it.
So I made a new trade and I kept 2 trades in. So I went in a large position into a stock called Innovative Industrial Properties, which Matt had spoken about. It's in the weed industry, but I got sort of hammered last night on that, down 2.6%. I'm still long the...
You got hammered on the weed or you got hammered on the stock?
I got hammered on the stock. The pro.
I never know with you, mate.
Come on. I'm long the Nasdaq Ultra Pro QQQ. Last night got hammered on that as well, down 6.5%. But as I said, I've got a big exposure to the Russell 2000, and it was down 11% last night. So,
jeez,
yeah,
not doing well.
Not a good finish to me. But my strategy, I'm going to stay with these stocks and see what happens over the next few weeks. I've got some stop losses on them, so I'm not going to lose too much. One's almost about to kick in if it drops any further, but I'm going to stick to my guns for the meantime and see what happens. How about yourself, Ren?
So, to take everyone back to the end of last week, I got stopped out of my original position, which meant I put a stop loss in and the price fell to that point, and so it automatically sold. So I was back to 100% cash at the start of the week. I put 2 trades on. I put half my money into Activision Blizzard, the gaming company.
Yeah.
Bought them at around $44, and by Thursday they were up 8.4%. So I was pretty stoked with that.
Nice.
I was feeling good. Half my money had an 8% gain. That means that my overall portfolio was up a bit over. It was about 4%. Feeling all right. Beating you. What could go wrong? Friday comes around. Activision Blizzard drops 3.5%. So I gave back a lot. Well, I gave back a fair bit of what I made, which was not great. But I think we'll see if I'll hold on to it and see if it recovers. But so that one went all right. The big learning for that, and something that people in the comp should probably take away from it, is if you do get a nice little gain and your stock moves up, it might be a good idea to move your stop loss higher up as well.
Absolutely.
Because I did set a stop loss, but it was a little bit below my buy price. And so then as it went up 8.4%, I didn't move it. And I regret doing that now. So
no, it's a good lesson.
It would have been nice to lock in some of those gains. So hopefully people can learn from my mistake there. The other one that I put almost half my money into was Dell, the computer company.
Yeah.
Because it seems like a pretty boring old company these days, but it actually, the last 6 months, it was up almost 50%, from a low $40 to around $60 a share. And so it had a nice bottom left to top right chart. And so I thought, why not give it a crack? Got in, and it sort of just traded sideways for the week. It's down about 1%. So no real big takeaways or lessons from there. Nothing lost, nothing ventured, nothing gained. I don't know what the saying is. But then the great trade of the week by yours truly, and as you alluded to before, I got to, I think it was Thursday night, our time, and for whatever reason I couldn't sleep. And just was on my laptop browsing at like 2 a.m, saw it's a 3 times leveraged S&P oil and gas explorer and producer bull ETF. And so I thought, oil was doing okay. The share was on a run because the markets were open when I was awake. And I was like, let's try and catch this trend. Unfortunately, I did catch a little bit of that trend, but then I definitely caught it the other way as well. So overall, I'm down 7.5% on that stock in like 2.5 trading days. But Friday, Friday US time, it was down 13.5%. Yeah.
Wow.
So I was up for a moment there, but then it's come crashing back down.
And what's the strategy with that?
I haven't decided. Luckily, it was only it was about 2% of my portfolio, so it's not really material, but it was just the money that I had lying in my stake account, and I was like, why not? But I think probably the biggest lesson from that one is if it's 2 a.m. and you just stumble across a
Don't go
trade,
leveraged.
maybe think about it.
Nice,
Yeah,
Ren.
so look,
Okay.
that's where I'm at. Doing better than my first week where I just got stopped out of my position. So, onwards and upwards.
Right. So we're both improved on last week. We've still got 4 weeks to go, so plenty of time to make our moves. We're just sitting back, letting everyone play around, and then we're going to come home strong. So just an update on the top 10. We have a new leader, Adrian R838 from the University of Tasmania. I've reached out to him, hopefully get some insight into what his strategy has been. He's up overall 30.92%. Last week we had James, who was our number one. He was number one for a long time this week. I think he got up to about 40% overall, but has subsequently dropped down to 21% gain overall. He was long weed, so I'd be interested to know how he managed those trades. So we'll keep you posted on their strategies if we can get in touch with them. And Ren, we will sit down with Matt from Stake as well to get his view on the market, what's hot and what's not, and we'll go into that with him now. So unless you have anything else to add, Ren, good luck for the next week, and we will talk then. Go the Bombers.
Sounds good. Go the Swans.
Equity Mate.
All right, Matt, welcome back to Equity Mates. We're in week 3 of the competition, kicking off tonight, 12:30 markets open, and we're checking in with you again for your opinion and views on what's hot and what's not, and the direction of sort of the markets. We've had an interesting end to last week, and I'm sure you've got an idea or an opinion on what you sort of expect over the next couple of weeks. So welcome. Always good to have you on.
Cheers. Thanks for having me, Bryce.
So last time we spoke 2 weeks ago, it was just before the competition started, and we were looking at weed as an industry or cannabis, and one of our leaders at the end of week 1, James, he jumped on a couple of stocks in the cannabis industry and did very well for himself and found himself on the top of the leaderboard. He's been kicked off the top perch, and we now have a new leader at the end of week 2, Adrian, who has gone long NVIDIA, and he's now sitting at the top. So I guess your opinion quickly on the cannabis industry. Has anything drastically changed over the last sort of 2 weeks in your opinion, industry specific, or is that still something that would be worth keeping an eye on?
No, it's definitely a hot space. I don't think business has changed too much over 2 weeks, but market perception generally of risk can change very quickly, as we found out on Friday. I must add that my tip was an absolute ripper.
I completely, yes.
Double OPR. I'm just looking at it, was tracking around $70 when we spoke, and it's now, finished up at around 88.
Yes.
I don't know if I'm allowed to get a trip to New York, but I'm booking my flight.
I'm kicking myself that I didn't put my money where your mouth was. And you also had another one. The name escapes me.
It was Palladium. It was just an ETF.
Yes.
More just as a trend moving up. Didn't really do a hell of a lot. Sort of back where it was after Friday's fall. And those falls don't look. See, I'm a bit nervous actually with what happened on Friday.
Well, let's talk about that. So you mentioned at the end of the episode a couple of weeks ago, you mentioned that there are a couple of stocks available to the more advanced traders to take advantage of trading volatility. And, we saw towards the end of last week on Friday that volatility really came back and hit the markets. Mm-hmm. So do you want to just give us sort of a rundown on what happened and what does it mean, how we can take advantage of it if it happens again? What's your sort of view on it?
Yeah, no, totally. Yes, the way I look at it is, if you look at the last, even 15 years after the GFC, there's been as I think I spoke about it before, a scar that sort of exists that's always there to be picked. After what we saw in 2007, 2008, there's a lot of fear that when the market falls, it's going to continue. So there's generally and naturally when the market moves down, it moves down a lot faster than it moves up. So what we saw on Friday was the market had rallied close back towards its previous highs or a little bit below across the indices, so the S&P 500 or the NASDAQ. And a lot of stocks have been making new highs, some large billion-dollar businesses. But what happened on Friday was the market fell around 2% in the NASDAQ and volatility really spiked. It was met with a it was actually met with a little bit of fear. Sometimes when the market pulls back, you can actually see volatility drop off because there's expecting there to be some support. But I didn't see that on Friday, which makes me a little bit more cautious as to where we go next. As I mentioned, I was a little bit cautious before anyway about the market, and this may confirm it. I just want to keep a close eye. You can't really confirm it from one day's move, but I'll be sitting very tightly and watching from the sidelines as to what happens next. And in terms of how can people take advantage of it, and that's the pretty amazing thing about the US is that there's so many different product suites and types available for people to access to make money when the market falls. They don't need to be that person sitting on the sideline hoping that their shares move up. So if you want to trade on the short side, for example, if you actually think this move is going to go back to those lows or towards those lows from December, you can take an inverse ETF, for example. So for those out there that don't know what that is when the market moves down, this ETF actually moves up. So it moves in inverse relationship to the share market or the index that it's following. So you can have an inverse ETF that is 1 or 2 or 3 times leverage. So it's definitely not for the novice. But if you're comfortable and understand the risk profile of these securities, they can be a pretty interesting tool to make some money when things happen quickly and move in the opposite direction to the market.
So that is SQQQ?
That's the short NASDAQ one.
And then if you want to trade volatility, what can you jump on if you want to take advantage of that?
There's a few instruments on stake in the US market that you trade volatility. The best way to do it is just to search for volatility. So the main one is the VXX is the most well-known index. It doesn't look to be around, but UVXY is quite aggressive. It's ultra short-term futures. So the VIX futures, there's different futures that have different maturities. So there's ones that are the first month, second month, third month, for example. And the first month is going to be the most. It's going to move the most according to the volatility because it's got the shortest duration. So the VIX, the UVXY focuses mainly on the first 2 months volatility. So that spiked 17.5% on Friday.
Yeah, big movement.
Yeah, I mean, look, you've got to look at it in perspective. This thing is down a significant amount over the last period.
Yeah.
So I was trading it around. It's had lots of splits because if you look at it over 10 years, this thing is literally down 1,000. Basically it's down 99%, $1,000 or something, and it's done various splits as it's become. Because volatility over the course of the last 10 years has really come off from the highs, and this thing just basically if it's what's in options terms it's called burning theta. Theta is the insurance premium you get, and it's continually lost, but it does have its moments where it really spikes up.
Yeah, right.
And one of those is Friday. But remember, this thing in December was trading at around $82. It's now trading at $44. So you've got to look at that 17% move in perspective.
So let's just quickly take it back a step for those that might be a little bit confused about what we're talking about. Can you just give your definition on volatility? So we know over the last 10 years, as you just said, that volatility sort of hasn't been in the market like we've seen over the last, since December-ish. Can you explain what we mean by that?
Volatility, by definition, is just the amount of movement, how fast something moves in the market. And naturally, people think of volatility as when the market goes down, but volatility can exist when the market goes up. So it's basically a measure of the market's movement. But what these instruments actually look at is the implied volatility, so the amount that people expect the market to move over a certain period. So when the markets move down, people get nervous and they expect more movement, so they buy volatility. It's basically an insurance premium for what they think is going to happen. So
it's a bit of a forward indicator, you could assume, in some regards.
Well, it's the perception of what people are going to do and how nervous the market's going to be. It's probably it's very technical, volatility. It's definitely not. I can't explain it in one podcast. I'm definitely not the best person to explain it. There's far more smarter people that can do it. But it basically is. It's known as the fear index. Is probably one way to describe the VIX.
Right.
It measures the fear of the market.
So what will you be watching closely over the next couple of days with, Friday, volatility sort of came back, and it's made you a little bit more nervous, I guess. What are you going to be looking for, sitting tightly watching? Anything that we can follow along at home and keep an eye on, or,
I'd be watching.
Secrets?
No, not at all. I mean, you should be watching what you normally watch is what is your stop loss for your existing holdings.
Yeah.
Make sure you've got that in there and you've got your risk in check. Know how much you're prepared to, give back until you get out of a trade, most importantly. But that, there's no guarantee the market could recover on Monday and all could be merry again. It could continue to go down. So I'm just going to see what the next move is. But I'm keeping a very close eye on the NASDAQ futures. So you can even watch those during the Australian Trading Day, and they're available on the CME website. You can get the futures pricing. That gives me a good indication of what's happening or what the market's expected to open, and that can paint a bit of a picture. So those are the futures. So they basically will be available before the market opens, and where they'll be pointing to where the NASDAQ ETFs are going to open. Where the actual index will, the group of NASDAQ stocks will open. So I'm watching that pretty closely. I'm still watching stocks. I think there's a lot of stocks that can go up even when the general market goes down. So I've got a bit of a watch list together as well. But
well, let's jump into that. You had very successful hot tips last time we spoke a couple of weeks ago. So
yeah, well, it all depends on when you get out, not when you get in.
This is true, very true. It's all about the sell. So what's on your list at the moment? Do you have any anything that's standing out? Either, from a positive point of view, or something to steer clear of, something that's not looking so good?
Yeah, no, I'm still keeping an eye on IPR. I still like the look of that. It's in all-time highs. It had a funny day on Friday, but I think it's still got strength on its side. One that you'd like is actually called Danaher.
Okay, okay.
And why that's funny for all the listeners out there is Essendon legend. So family, Essendon family, really.
Yes.
And that's DHN is the stock code.
Okay. I think I'm going to have to get in on that.
DHR, sorry. My writing is so bad.
DHR, okay.
And if you look at this chart, yes, it's gone. Literally, it broke out above $1.10 and literally is now to $1.32 on pretty significant volume. So it's trending in the right direction. Don't know where it'll go next, and obviously no advice given here.
Sure.
I just like the look of it, and in the name, just definitely going to get a rise out of you.
I'm on it.
Yeah, the other one I'm looking at is Ulta, ULTA. Now, Ulta is a beauty store, and it's really weird. When I lived in Chicago, I'd walk past this thing and go, oh my God, like it never looks busy. Maybe this is where I was living. But so I've got a preconceived idea of what these stores are like, and that would never hold me back from making a trade. But this thing has just been making new highs for years, really.
ULTA. So that's an interesting one, in terms of making new highs for years. I tend to think of trading, we've spoken about this, but is sort of shorter term. And when I look at these trending graphs, I tend to focus on a bit more than, a bit less than 12 months. But if you're sort of signaling that something's been hitting a new high for year after year, then I guess it shows that the stock is still in demand. And
totally.
I guess it's a good lesson for beginner investors that it doesn't have to be in demand, on the day that you're buying it. It could be a very long day.
No. If you can manage your risks, you should stay in a stock as long as you can while it's making you money, really. This thing in 2010, back end of 2010 or middle of 2010 was trading around low 20s. It's now trading at $330.
Whoa.
Yeah, so that's 100% year on year, really.
Yeah, that's significant growth.
It's, you can be in a trade for 10 years if it's working for you. A lot of people think of trading as short term, but investing is a subset of trading, really. You still need to buy and sell a share at some point. I don't know whether Ulta will do the dash over the next few weeks to win the person, someone a trip to New York. But I just like the look of what I'm seeing, and I wish I'd been in it since 2010 when I was actually living in America and looking at these stores going, does anyone ever walk into them?
Well, it's strange that you see sort of, if you were doing an investing approach of sort of what based on, I guess, going in stores and the experience that you see walking past down day in, day out, you probably wouldn't have chosen to invest. But there's something obviously about the business that investors like, and it's reflected in their share price. So
clearly I'm not walking into one of their stores, so that's probably a good thing for them. But it could just be where I was living. But sometimes you can get too emotional and connect to the brand, either because you like the brand or the share price matters something different. But here's the opposite. Here's a case of me looking at the company, having no affinity to it at all, but as an investment, it would have been amazing.
Yeah, it's really
so sometimes you've just got to remove yourself from the business, like the brand, and actually look at the underlying business. But actually, not even beyond that, is this share price going to go up? Am I going to make money on it? That's all you really need to ask. Whatever your investment decisions are based on, you've still got to make sure that you buy it at one price and sell it at a high price ultimately.
Yeah,
to make money. So
it's all about making money.
That's right. Yeah, so that's one for maybe the comp. I don't know. I'm going to keep it on my watch list because I've definitely I've been too biased by my experience walking past the store rather than the share price, which has been phenomenal.
Yeah, no, that's an awesome lesson. So there's some three hot tips.
And one more.
Okay, nice.
One more for you, mate. This one's for free, Bryce. Just like brokerage. Tandem Diabetes. It's been a massive favourite on stake.
Okay.
I just can't, as I said, I don't know what's going to happen over the next few weeks, and I don't know what's going to happen tomorrow or what's actually ever going to happen with this stock. But it just continues to come on my watch list. So I just want people to maybe watch it with me and give me some ideas what we should be doing.
So
TNDM.
TNDM. So we've got Tandem Diabetes. And it's on a
it would have
bit
been
of a
up
run.
over it's been one of the most successful shares on stake for the last year.
Wow. And still going.
Yeah, it gapped up from 50 to 60 in February, and it had a pretty rough day on Friday, but this share is just moving in the right direction.
Wow. It's the holy grail, the gap up.
Totally.
So we had Danaher, we had Altia. Was that right?
Alta.
Alta.
Danaher is DHR.
Yeah.
Alta is ULTA.
We had the diabetics.
Yeah, Tandem, TNDM, and then industrial.
Yeah,
Innovative Properties. Yeah, and we've moved off Palladium. It just wasn't moving for us.
So let's put that to the side. Focus on some new adventures.
Exactly.
Yeah.
Let's move on.
Awesome. Well, thanks for that, Matt. That's a really good, I guess, insight into what you're looking at the moment. And as you said, by no means are these stock sort of tips, buy, sell, hold. This is purely just general information to help inspire others, I guess, and get them exposed to the vast array of stocks that are out there. So many. So it's always good hearing different tips and ideas from other investors. So
and these are really, and just to second that, it's really about, all of these could be wrong, one of them could be right, and you can still make money. It all depends on how you manage your risk. I want to continue to make sure that the listeners out there understand that it's not about stock picking. Really, it's actually about managing risk is what this game's about. So you can have a hit rate of 20% and make an absolute fortune.
So we have 4 weeks to go, Matt. Next week's going to be a really interesting one, as we've already discussed. We finished last week a bit jittery, so we're going to be on edge on Monday night tonight when it all opens up again.
It depends which way you're positioned, right?
This is true. If you're short, then you're going to be hoping for...
Or if you're long volatility, you could be looking for a continuation move. So
get your stop losses in if you're hoping to...
Always have your stop losses in.
Yes, yes, always. Matt, you and I will be at UNSW on Tuesday, tomorrow night, if anyone is listening and they are a University of New South Wales student, or even if you're not, you can probably come along anyway. But we're going to be there doing a bit of an intro into investing and finance and pretty much just chatting all about this stuff. So come along. Kicks off at 6 o'clock. If you want more details, just hit us up at contact@equitymates.com. We also have an event on our Facebook page. So we had a great time at Macquarie Uni last week, Matt, and hopefully the vibes continue tomorrow night. So looking forward to that. And we will check in with you again next week when we're halfway through the competition. We'll give you an update on our portfolio because it's something we haven't discussed yet. So the Equity Mates will reveal what we've been doing. Be good to get your opinion on that. But thanks for your time. Always good to chat and get an insight into what you're thinking. And we'll talk next week.
Cheers. Thanks for having me.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mates.